Hello and welcome to the Correspondent.pk. This is Faraz Saeed and today we're going to talk about the recent monetary policy announcement by the State Bank of Pakistan. The State Bank of Pakistan on December 14th has announced its monetary policy. In its monetary policy announcement, the interest rate has been jacked up by about 100 basis points. That means the interest rate has increased by 1% to about 9.75%. The primary objective of State Bank of Pakistan to increase or jack up its interest rate was to control the rising, skyrocketing inflation and to ensure that the economic growth is stable. The Monetary Policy Committee in its announcement on December 14th has projected the growth to hover around 4 to 5% and inflation rate to remain between 9 to 11%. Now these numbers or predictions are too optimistic because analysts have something different to say. The analysts believe, following the monetary policy announcement, that the rise in the interest rate would decrease profit margins of the companies. That means the investments into the economy, the domestic investment primarily, will shrink, reducing the economic activity within the country. That means the economic growth projections are too much an optimistic approach. Secondly, the inflation prediction to hover around 9 to 11% is too much of a hoax, according to the experts of the economy, because economists believe that the inflation prediction that has been made in the MPC announcement is related to money inflation. That means the money inflation is primarily related to the upper strata of the economy. The lower strata, the inflation rate they expect to rise to around 15%. That because the food inflation is primarily dependent on the oil prices, and oil prices are already riding on historic highs. However, the State Bank of Pakistan's policy prediction can only be in line if the recent reports are to be accepted. According to the news reports, the government of Pakistan, in order to counter inflation rate, has or deciding to reduce down the oil prices by about 11 rupees. So if that policy or if that approach is to be achieved, only then the optimistic economic growth rate are to be believed. In the other case, in the alternative case, if the government fails to decrease oil prices by 10 to 11 rupees per litre, the State Bank of Pakistan's economic growth rate is too much of an optimism. Moreover, the analysts believe that the rise in the interest rate would inversely affect the employment, because reduction in the domestic investments would squeeze down the economic activity. That means unemployment would rise. Now the State Bank of Pakistan has decided to increase its interest rate at the cost of economic activity in the country. So it's really hard to predict an economic growth of about 4 to 5% with an increased interest rate of around 9.75%. The economists believe that this 9.75% interest rate is only allocated to attract the foreign investment in the form of hard cash, because the foreigners would find this 9.75% interest rate as too much of a lucrative opportunity to park their dollars within the Pakistan's economy to attain a higher interest rate. However, this policy approach would also affect the government's fiscal tool, because essentially the government of Pakistan is one of the highest borrower from the local banks. So with an increase in the interest rate, the government of Pakistan would not only see a rise in its debt, because again the government of Pakistan has to pay more debt in the forms of interest payment and return on the debt. Moreover, the government of Pakistan would find it very expensive to spend money onto development projects. That means the economic activity, not just from the fiscal point of view, in general would be dampened, and expecting economic growth of about 4 to 5% is too much an optimism. So the rise in interest rate is generally seen as a bad omen for the macroeconomic indicators, and the stock market and the investors in general. However, there's one important thing that has injected a sense of stability into the investors, which is that the State Bank of Pakistan claimed that the policy rate would broadly remain unchanged in the near future. That means the investors have a clear cue of stability, that the interest rate would not be hiked or jacked up in the near future, and this kind of stability is very crucial for stock market to run smoothly, for stock market to register a great recovery after historic lows, and for the economy, for the investors to invest and take loans on stable rates. Now, it is yet to be seen if the State Bank of Pakistan's policy rate announcement has a positive impact on the economy and stock market or results in an inverse impact on the economy.